S&P 500 closing bell 8:10 weekly chart. Today is 8:11. It's 10:02 a.m. Pacific Standard Time. We are going to be covering various different subjects about markets that are important to understand at multi-year highs. S&P has not hit it. However, it's very close to challenging the very highs that we had shorted. This was the rally in high frequency trading models that are in the exchange models and used in the S&P. What I will do is I'll draw a couple of trend lines for the MMTs right here, okay? And when we put in the bottom here on the S&P was a short up here, it was a major resistance from the 2012 rally, as we understand and know. So let's take a look. Let's make sure that one thing we do know, that back in calendar 2011, that when we shorted these highs last year, this is where it started, but this is where the breakdown was. And I'm going to draw a trend line right through here because it's this major 4-week top that we shorted all the way down. And then austerity was working at its very best levels at that time. There was a lot of problems, but we had 4-week buy programs. We had the calendar 2012 bottom right there, and it hit it right here, and it took off. We started the year. We made the highs. That was price diminishing. We came down. We tested it. This is where all the austerity, it came right back and tested the breakout of the calendar 2012. One of the things that we would like to point out to you clearly is how buy programs work when the earnings were not as great as they should be. Europe has slowed down considerably. All of the analysis that people are finally wanting to admit, where they've been in denial in the past, are true. However, high frequency buy and sell scripts work a different way these days. And basically, when we had all of the Europe news, we got this little ascending breakout that started right here, and it started on 722. Down here, this last 3-week move, and we're going to hit that S&P wall of resistance. We're going to challenge the highs. We're not far away. What we will do, though, is we'll use our MMT platform to give us what those upper delta ranges are mathematically. And if we do break the high, back here in 2007 on the S&P 500 are going to be very, very, very important. And as we approach this calendar year reversal to the calendar top resistance of 2012, we're going to take a look at what the high frequency trading models would have to do to get it to these next resistance levels. That's 1452 on the S&P right here. This is where that 2008 breakdown happened in this weekly bar. I'm pointing it out clearly here. Now, we would also like for you to know that high frequency trading has a way that pushes the leadership stocks higher in the S&P 500 to get the index all the way up there. And basically, we want to teach you everything about this right here. Traders who utilize high-frequency trading algorithms designed with mathematical bid and ask prices that allows the SMF market maker to compete with the high-frequency trading technologies and traditional NYSE floor traders, which lets you beat them at their own game. So, and it does, and it's foreign to you because a lot of people don't. You've probably been hearing about it on TV now, but once again, I'm going to get back to clicking on our HFT page. We'll be giving a lot more stuff. For the people that are really involved these days in the shorter term market, you're going to need to know how to utilize these high frequency buy and sell scripts and how high frequency robots work in trading systems. Go to our night capital trading video. They used it and they lost $440 million on the opening bell trading NYSE listed stocks in their new software program that went bad on them. And we have that. What we would like you to do is go to the trading school. Again, click on the tab and let's find out why the top 1% steal from 99%. And how they created that advantage to them and how that has left the day trader out of the game. I can tell you right now, I'm very excited that if we break this high, we're going to challenge right here in the very near term. We're going to challenge the peak of this weekly high. That's 1438 in the short term. If we break the calendar yearly reversal high right here on this S&P now. We haven't got there yet, but we're running there, and we're doing it in the dog days of August when everyone's on vacation and everyone is out of the market and the volumes are lower. These mathematical buy and sell scripts in the S&P 500 are buy programs that people are not aware of. So let me just take you over here. There are 500 stocks in here, and it's the leadership that have the heavier HFT programs on the buy and sell script, meaning that these high frequency models can sweep all of the high beta stocks, run them higher in the S&P 500. That is how these indexes go higher. If the broader part of the S&P, not the broader part, but the leadership part, let's talk about the leadership part of these 500 stocks weren't doing their thing, you would not be testing this wall of resistance up here. And we are. And we called that reversal and went straight down. And that was a great trade using the S&P 500 put options. They're all on the website. Then they broke it up higher. And high frequency came right back into play again. And when we cleared this area, we're hitting this area. But the major wall of resistance moving forward in high frequency is going to be over here now. It's going to be this 1438, 1452 area. You're going to have to break this reversal high. Here was a reversal high one time. We're right here at this area of the calendar year. So up above here, of course, if I draw a trend line, and I'm just showing you this on this platform, MMT, we already told you in the market maker application, it has this all factored out and it's all priced for you. I'm just showing it here on a public level. Here's a 1500 level. Here's a 1475 level. Here's that 1452 level. Here's that 1438 level, though. So this is the bottom. This is where we rallied up before we had that big reversal in 2007. 2008 reversal gap down is what's going to come into play. And of course, right here will be the first area of the 2008 top right here, which was on 518, a 2008 top right here. That's a trend line. Now, when we move that over here and take a look at current, we know what those trend lines are, and they're not done with my platform. I'm just showing the standard chart to our network. They will use that in their training part. When we get into buying calls and buying puts here. So here's a major wall of resistance in the very short term, and we're above this major wall of resistance where we had prior reversals. And let me show you where this was. This was back, let's just call it right around 429. We come up off the bottom, but we had that major reversal, okay? We are above that resistance level, and that means we're going to come over here and test this area now, 1417, 1420 area. The high was right here. However, we're going to take a look at how we can get to here and what it would look like if we break out here during the month of August. And can it be done? Sure, it can be done. And 1427 up here is going to be a major area of resistance. We'll feature here on the daily chart of the S&P 500. This is where your reversals were over here. That's going to be this 1416 area. This is in our platform. Now, our platform does all the math for you. So when these high frequency platforms are working in the S&P, you can see how they make it. They'll shake you down a little bit. They pop it, but look at the higher highs and look at these diamonds ascending here. But notice the high was higher than here. They pull it back. Notice that this high was higher than all of these last highs here. But they pull it back very accurately, and then they run that thing in the high frequency computing model, which we have right here in our system mathematically. We can tell you that this will change on a daily level, but if we go up to 1442, that's 3.5 deltas in our system. That's 36 handles higher. If you hit the 1421, that is 1.5 deltas. That's 15.5 points higher than this current level. That would get us to all-time highs. But the 1/2 delta up, we got to get through that 1411 handle in order to see it. Now, mathematically in our delta ranges, they're 100% accurate as far as where changes in high frequency models take place. And the diamond alert system is when the diamonds are ascending, that is when the high frequency technologies are working at their best. And once again, my friends, that's why that platform is telling you which way those high frequency programs get right here with the high frequency trading courses. That's all you got to do. Read this page here. Be very, very thorough when you go through the stockmarketfunding.com website. We're approaching all-time highs in our daily system. This is where we were short once. We started that calendar short, but this was that long, deep short right down here where it was time to get net long. And in our platform, that was starting 6-4 when I was buying up and out of the money calls on the S&P 500. How far they would go, no one knew, but you would know when to be a seller when the frequency changed. But he pulled it right back in the daily base, and he made the higher high. And up and out of the money calls on the indexes did well. You sell them, you pull back, you break out. This is how we gauge it, and we do it mathematically. Here, 1379.81, if we do get a pullback, that'll be your first area of that daily half bar support on the S&P 500. We're going to have to clear this area in the MMT platform. And here is this long burn right here of the calendar year. But here is the key right now, and I'm just going to blow this part of it up. Okay? When we start moving up here, this area, this peak where we were getting short, and we have the live videos on stockmarketfunding.com from that calendar 2012 short on all of the indexes. How do you find it? You go to here, click on stock indices, month and year, go back and put in the month and the year. Then you could look at the 2012, 2011. If they're not in here because it's a brand new site, go to the YouTube channel. You'll find it there. Now, what I will be talking about is what that upper end, I already showed it to you on the weekly chart. That's standard. This is our platform. We're going to have to get through these areas in the very short term. That means that these diamonds here is where these major reversals were of the calendar year. That's our resistance level right here. This diamond right now, 1416 S&P. Not only that, we will be taking a look at the longer short mathematically coming both ways. That's how high frequency works. They took the S&P down. That was a great short. When they get to the bottom, they walk them all the way back up. They have these special high computing supercomputers that buy the broader the S&P 500 futures and the broader S&P 500 stocks. I would love to show you for free why you can beat them at their game. And even though that regulators don't regulate, look it, just get involved, click on join the SMF Market Maker School for free. You'll get to see during the live market hours what we have to say about high frequency technologies and how to beat the market, why the exchanges have forever ever changed, and why the day trading public and investor traders have been beaten by machines as they have, and now it's all about machines against machines. But who cares? All you care about is when that machine hits that leverage up buy program on these dips, and you go that way and you let those high frequency machines work for you. Don't worry about how bad the economy is. Don't worry about that the world is in a financial systemic risk. Don't worry about any of it. That's later on. Right now, it's about which way they're taking the tape. Now, it's all about, I am calling a reversal as we move up to these wall of resistances. I will let you know when we start getting one of these again, the long reversal. You will know right away.